What's up, guys? It's Dan from Coin Bureau Trading, back at it again with another crypto market update. Today, we're going to do things a little bit differently. We're going to take a look at why the crypto market is crashing, and more importantly, why it's going to recover in the coming days and coming weeks. If this is the kind of content that you enjoyed, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and honestly, guys, if it is, that's awesome. The more difference of opinion we have, the better traders, the better investors we're all going to become. With that being said, let's jump straight into it. The reason why the crypto market is crashing is, of course, because there's been over $2.25 billion of long liquidations over the last 24 hours. For those of you who don't know, long liquidations is basically when traders are betting that prices will go up, then prices start to go down a little bit, and the result is that these traders are basically forced to sell, and then this forced selling results in prices going down, obviously, and when prices go down, then this results in even more forced selling, and then you have people waking up around the world and panicking and panic selling, which take things lower, and the result is that you get a very, let's say, liquidation, a very liquidation-heavy move, but I guess it's very reflexive, very almost like automated crash that's very big and very sharp. Most of this crash is over. I'm not going to get too much into the details here around these liquidations. You can check out Aaron's video from earlier today if you want more details there, but I will be coming back to the DeFi liquidations, which is why Ethereum has been hit so hard. Of course, besides the fact that a lot of the liquidations on exchanges was from ETH, a lot of ETH also got liquidated in DeFi, which is why ETH was hit so hard, but I do think that that move is over, and I'll come back to why that is in just a second. Of course, the thing that triggered these liquidations was this news of these Trump tariffs, and basically investors around the world waking up and reacting to them, and again, I do think this is something that's also going to be short-lived, and I'll explain why at the end of the video. But first, guys, I really want to underscore the reason why I think that this crash here is basically close to over, and that why we're going to see a recovery here in the coming weeks. And it's basically going to be a summary, actually, of a research feed post I did today in the Coin Bureau Club. It's very simple, guys. You know, like, I'm sure, like, when you're seeing me and even other people being bullish, you're thinking, how could you possibly be bullish? And it's a simple reason, guys. Basically, over the course of crypto's history, it's followed a very predictable 4-year cycle. So if you're hearing people saying that, oh, it's over and we're going back into a bear market, then what those people are arguing is basically that this 4-year cycle that we know exists and is not just in crypto, it also exists in liquidity, which I'll get to in a second. But this reliable 4-year cycle, which well, I mean, it doesn't exist in every asset class, but every single asset class follows a cycle. So to say that now we're re-entering some kind of bear market and that the top is already in, you would basically be making the argument that this time is different, and this is an argument that's very difficult to make, in my opinion, and in a weird kind of paradoxical way, the onus, like I guess you could say the pressure is not on those who are bullish, the pressure is on those who are saying it's over, it's over, it's over, which can seem a little bit paradoxical when the crypto market is crashing like this. But in my view, if you want to be super bearish, then you have to make the case that this time is different. And again, this is extremely difficult to do for reasons that I'll get to in just a second. But first things first, guys, as you can see here, at least in crypto, the 4-year cycle is driven by the Bitcoin halving. And what typically happens is the year after the halving is typically when Bitcoin sees its biggest gains. So I guess specifically over the last few years here, that in July 2016, Bitcoin had a halving. 2017 was the cycle top. In 2020, Bitcoin saw a halving. 2021 was the cycle top, and then in 2024 was the halving, and in 2025 will be the cycle top, assuming history repeats. So that's the first thing. Again, and this is just one of many factors. I'm not resting everything on this, but it's just one thing to keep in mind that first things first is we have this 4-year cycle, and assuming the cycle is intact, in 2025 will be a very big year, and of course we're just starting this year. So this moves, I guess, on more into the crypto-specific factors here. Of course, there have been structural changes to the crypto market that are currently underway in the US as a result of regulations. Everyone seems to have forgotten this headline from BlackRock that they want the SEC to rapidly approve the tokenization of bonds and stocks, something that's likely to happen given that there have recently been regulatory changes at the SEC. The reason that I'm pointing this out is to kind of underscore that if we're starting with the assumption that the 4-year cycle is intact, and then we can see here that there are crypto-specific factors that back it up and suggest that not only is the 4-year cycle intact, but that it's going to be bigger than all the other cycles that came before. And in this case, I'm highlighting the fact that we have a president of the United States who literally launched a meme coin, who has his own DeFi protocol, who's been buying Ethereum, who has appointed pro-crypto regulators to all these different regulatory agencies, which are now basically going to allow anything to pass, essentially, especially after the meme coin launch. So if you see these structural changes, again, in my view, it's very hard to argue and say like we're entering a bear market as these changes are coming into play. And you might say, oh, but it was just a sell the news event. But of course, it takes time for these things to change. It takes time for these structural changes to come and for this kind of like liquidity to flow into the crypto market. And the reason why I'm pointing out this BlackRock SEC thing specifically is around tokenization is that I've noticed over the last week or two that there's been, or specifically over the last week, that there's been a lot of crypto projects that are positioning themselves for some big announcement in the real world asset space. And I have a suspicion that it could be related to this upcoming event from Ondo Finance, which is going to be here on February 6th in New York. And of course, here they're promising that there's going to be some, big announcements. We're going to bring together biggest names in traditional finance and blockchain. This date will unveil the next era of finance and blah blah blah. Which of course, maybe they're just hyping things up. But I was actually doing research for Ondo over the weekend as we're going to be covering it on the main channel. And Ondo, of course, has close connections to BlackRock and all these institutional players. Ondo also has very close connections to the Trump administration, to PayPal. Peter Thiel's founders fund invested in Ondo. So this is not something to write off. It's not just some random crypto project. This is a crypto project that is working with BlackRock, that is working with key players in the Trump administration. And they're announcing, hey, we're going to make some big announcement, not just for the project, but for real world assets in general. And this is on February 6th, which is in 3 days. So it would not surprise me in the slightest that this is when we start to get some really big announcements. And this is something that could trigger a recovery in the short term. So this is why I'm kind of highlighting that. And then the longer term, this is another thing, and one thing that I think a lot of people don't understand, and it's something that I also highlighted in the Coin Bureau Club. Basically, once upon a time, there were banks in the U.S., I think it was specifically Silvergate and Signature Bank. They had these systems. For Silvergate, it was called the SEN, and for Signature, it was called Signet. And what these systems did is it made it possible for large amounts of money to move in and out of the crypto industry 24/7. It was basically like these networks that featured like the largest market makers, the largest exchanges, the largest stablecoin issuers, and they basically all formed this network with the help of a bank. And this would make it very easy to move money in and out of the crypto market. And these networks were shut down in early 2023 as a result basically of anti-crypto regulations. Not going to get too much into the details there, but the point being is that people forget that there was a critical piece of crypto infrastructure that was essentially destroyed in early 2023. And this critical piece of crypto infrastructure is something that is in the process of being put together thanks to the positive crypto regulations under the Trump administration. And the result of that, I guess, in this context, is that it should help mitigate like these huge liquidation-driven moves that we're seeing over the weekend, all this volatility. This is largely a consequence of the fact that it's very hard for money to move in and out of the crypto market during the weekend, at least compared to what it was before. This is something that's likewise going to improve. And of course, this is why I'm underscoring that the Bank of America CEO said that the financial industry is eager to jump into crypto, especially specifically crypto payments, when regulators allow it. And as some of you may have heard, of course, the Fed recently said that yes, of course, U.S. banks can serve crypto customers. This was literally like 5 days ago. It's funny how everyone forgets about this bullish news. The moment the crypto market is crashing, it's almost like it doesn't count. It's almost like it's all over, right? Very short-term thinking. But again, we're slowly seeing these structural changes to the crypto market. And the interesting thing here, especially with as it relates to Ondo, is that we're getting this very interesting blend because, stable coins arguably fall under like real world assets. So you have this interesting thing where you're going to have real world asset announcement coming here, and that could potentially be paired with something related to PayFi and like stablecoin payments, which banks are really eager to get into, whereas asset managers are more about tokenized real world assets. The banks really want to get into payments with stablecoins and crypto. And the Fed is basically, for Jerome basically signaled that, yeah, you can do that. And again, this was just a few days ago. So again, just to recap, these are kind of like the crypto factors here, structural changes to the crypto market, I guess in the short term, a catalyst that could cause the crypto market to recover, and then more longer term structural changes that are going to result in more inflows into crypto. It's just think about, like basically they say like follow the money, and in crypto, the money is stable coins. So if we're going to see all these barriers around stable coins reduced, it's going to make it that much easier for large amounts of capital to flow into crypto, especially if we see a resurrection of these networks kind of like SEN and Signet, which I know that some banks already provide something like that. But to my understanding, these banks have not put, like at least existing banks have not put together a comprehensive network to replace this SEN or Signet precisely because there were anti-crypto regulations until recently. And again, like this is nuanced stuff that like people don't, they don't really think about when they're looking at the charts. But of course, this brings me, I guess, more to the macro side. So you might say, okay, yeah, but 4-year cycle. Someone in the Discord was saying, oh, but we have limited evidence that like this 4-year cycle is intact and blah blah blah. Okay, fine. Then let's forget about the crypto side. Let's forget about all those objectively bullish things that I just mentioned. Let's just completely throw that aside and just look at Bitcoin's correlation and crypto's correlation, for that matter, to global liquidity. For those of you who might recognize this chart, this is basically the global liquidity measure from Bitcoin Magazine. It seems to be fairly accurate. I mean, at least based on past price action. And shout out to Bitcoin Magazine actually for providing us with some of these plans here, so that we can actually look at this data. And I do suggest signing up. They have some very useful indicators on their site. But that being said, guys, as you can see here, global liquidity continues to rise and is projected to continue rising into the end of the year. And the interesting thing is that just like the crypto market, just like the Bitcoin halving, global liquidity follows a 4-year cycle. And this is something that was identified by Michael Howell. I'll try and make this a little bit bigger so you guys can see here, or maybe I'll make it smaller because I know the sides of my screen get cut off here. But as you can see here, this is I just kind of paused from a recent video here, that you have this global liquidity cycle that again also follows a 4-year cycle. This is because of debt refinancing, and Michael Howell projects that global liquidity will continue to rise into the end of the year. So we also have, forget about the crypto stuff. On the macro front, there are some bullish factors there as well. And of course, I'm sure you're all going to be asking, well, what about the tariffs? What effects the tariffs will have? I'll get to that at the end of the video. The spoiler is that I actually think those tariffs threats are either going to be reduced or completely removed over the next 24 to 48 hours, because Trump is actually going to be doing a meeting in the next few hours here. Possibly by the time you guys see this video, Trump will have had a meeting with the leaders of Canada and Mexico. But if you're still unconvinced and you're still not sure, then just take a look at this chart here. This is the total crypto market cap. So the market cap of all the cryptos combined, Bitcoin, Ethereum, everything. And you can see here, yeah, of course, this recent price action is not very pretty. It's very scary. But it's not necessarily bullish. Crypto is very clearly in a strong uptrend here. The bull market is very clearly still intact, even though it doesn't feel like that when you're zooming up close. Like here, if we go to the daily and you're looking at this and you're thinking, oh my God, it's over. Like, look at this bearish pattern. Look at this, it's over, right? But if you zoom out, it's like, okay, yeah, sure, maybe there'll be a little bit of a chop and grind around this level. But the more that you zoom out, the more obvious it becomes. We're in a very long-term uptrend here, guys, and I wouldn't fade that, especially when we combine that with this historical 4-year cycle and the rise in global liquidity and the structural changes to the crypto market. Not even to mention the changes in terms of altcoin ETFs being approved, with the SEC taking comments about the Litecoin ETFs, which could potentially pave the way for an approval there, which would kind of open a Pandora's box, because it would signal that basically all these ETFs don't need this extra approval or extra vehicles from like the CME to be approved by the SEC. And of course, but of course, when I'm looking at this total crypto market cap, it goes without saying that a lot of this is Bitcoin, which of course begs the question of what's been going on with altcoins. And I'll actually pull this chart up here. So this is others on the monthly, and similarly to the crypto market in general, you can still see that altcoins are in a strong uptrend overall altogether. Of course, they did see a pretty nasty fall down back here to this trend line, which actually extends all the way back down to 2017. So you can see, like, this trend line has held quite consistently, basically for the last 8 years, I think. So unless this trend line unless we see a complete break below this trend line on others, this bull market is still intact for altcoins, which I know sounds crazy because a lot of them are down a lot. But you can see that even based on this wick, that a lot of people were buying that dip. And I do think that that's basically it. And of course, maybe we'll get another month or something of chop within this range. But what I do think is that by the end of this month, it'll be retesting this 380 billion resistance trend line, and then going higher. I actually think that's going to happen. And again, guys, as I was explaining in my video last week, if you look at Ethereum, you'll notice that it tracks others very closely. We're also here on the monthly chart. As I was mentioning in that video last week, the worst case scenario was that ETH would fall to this Bollinger Band moving average on the monthly, and of course it kind of wicked below that, and that begs the question of what exactly happened there. And the answer, guys, is DeFi liquidations. As you might have heard, or as I mentioned at the start of the video as well, well. There was hundreds of millions of DeFi liquidations, especially with ETH, and this is part of why ETH's price was pushed down so brutally. Long liquidations on exchanges, liquidations in DeFi, and the result is what you see here. But I do think that by the end of the day, potentially, maybe by tomorrow, we should see ETH coming back up to this Bollinger Band moving average on the monthly. Deviations below these levels are normal, as a result of leverage. But you can see that since 2023, this Bollinger Band moving average has basically held, and so long as ETH is above this level, Ethereum is in a bull market, and because altcoins are basically following ETH almost perfectly here, if we switch over it, like the charts look basically identical on the monthly, and that's not a coincidence, guys. Like ETH basically leads all the other altcoins. All the other altcoins are highly correlated to ETH, so it's no surprise that the two charts here look literally identical. And I'll also point out that you can see that this resistance trend line is also consistent with the Bollinger Band moving average here. You can see even going back down here to 2023, and then to last year in 2024, you can see that both of these levels here were quite critical, and you can almost draw a trend line here as well that follows this trend line, right? So the same as for others, the same as with ETH. So just keep your eye out for ETH. I do think that it's going to recover. Everyone seems to forget that Trump was buying tens of millions of dollars of ETH as recently as a few days ago, and for some reason they can't put two and two together and understand that, like, Trump is buying ETH, he's launching a DeFi protocol on Ethereum. Does that mean Ethereum is going to completely collapse and we're going back into a bear market? I mean, I guess it's always possible, but I think the the chances of that happening, I think, are pretty low, and I do think that the risks continue to be to the upside, which is of course something that some people in the Coin Bureau Club are kind of getting sick of me saying. But with all that being said, guys, like, again, like, there's, yes, of course, this price action is brutal, but the bull market is still intact, and all things considered, like, all these cryptos, whether it's Ethereum, altcoins, uh, Bitcoin, they all seem to be at levels where they're going to basically, they're probably going to bounce from these levels. And again, I gave one very short-term catalyst here, and then we have longer term structural changes as it relates to banks and whatever else. So I know this price action is brutal. Maybe it'll last for another day. Once everyone wakes up and realizes what's going on and we get some panic selling, then maybe after that we'll start to see prices headed higher. But again, as the saying goes, when in doubt, zoom out. Of course, as you might have noticed, I do have to shill the Coin Bureau deals page here. We were just using Binance. We have a 20% trading fee discount and up to $600 in bonuses. And that doesn't cost you a thing to take advantage of those deals. Those deals will help you out, even if you're just trading with a small amount of money. If you're trading frequently, those fees do add up. I know that from experience. So just take advantage of those deals using the link in the description. The exchange gets a new user, you get a trading fee discount, and we get a cut of your trading fees. That's how we make our money, as well as through the Coin Bureau Club, which I'll quickly shill as well, just back to back. It's where we do deep dives into small cap altcoins every single week. And the way that we pick those altcoins is we do a weekly poll, and the way that we add those altcoins to the poll is based on our research as well as suggestions from our Coin Bureau Club members. We have a research feed where I'm sharing the kinds of insights that I shared in this video. I guess this whole video is kind of like a summary of my research feed post today. And we also showcase our personal crypto portfolios as well as the cryptos that we're watching. We have exclusive deals on crypto analytics websites and the like. And we also have a members Discord where you can ask us questions, or in this case, grill us and wonder, why is crypto not pumping, and asking us to justify why crypto is still in a bull market when, by all possible measures here, it looks like it's still in a very strong uptrend since 2023. And it looks like it's going to bounce from here and continue heading higher, not just because of these shorter term catalysts and structural changes to the crypto market, but because global liquidity is rising and is projected to continue rising into the end of 2025. So with all that being said, here's kind of like my bit of alpha for today. In the next few hours, as I was saying earlier, Trump is going to be speaking with Trudeau and Mexico's leader, this Sheinbaum, or however you pronounce her name. But the interesting thing, guys, is that Trump has apparently not spoken with Trudeau for months. I remember hearing in Canadian media that they had not spoken, I think, since Trump's not his inauguration, but since his election. So it's been like 2 or 3 months since he spoke with Trudeau. So I do find it quite significant that Trump is going to speak with Trudeau on Monday morning, and he's here basically asking for some concessions, it sounds like. And I do think that what's going to probably happen is that there will be some kind of negotiation. Maybe they'll do like phased in tariffs. Maybe they'll delay the tariffs for some time being. I do find it very interesting that the tariffs were set to kick in not today but tomorrow, and I feel like a part of that was to really spook the markets and make it clear to Mexico and to the whole world, for that matter, to Mexico, Canada, and the rest of the world, that Trump is not messing around, and he doesn't mind basically throwing the markets under the bus to put these tariffs in to really bring, and especially the currencies. The currencies are the ones that are being blown up the most right now. And I think that this is to send a signal to the world that like he's really serious about these tariffs, and or rather that he's really serious about negotiating. This actually reminds me one thing, that you guys might be thinking, oh, but everything's going to change now. Tariffs are coming in and inflation is going to go up and whatever. I could do a whole other video explaining why that's all false. It's going to do more damage to growth, which would actually lead to more Fed cuts. But we're because it would impact the markets, and the markets are the things that are driving the economy these days because of the wealth effect. Especially, most of the consumption comes from people in the upper class, and most of their wealth comes from stocks and whatever. So I'm not going to get into the rabbit hole there. But the one thing I will mention is that Howard Lutnick, which of course is the CEO of Cantor Fitzgerald, that has close ties to Tether and so on and all this stuff. But the CEO Howard Lutnick, he recently did a testimony because he's in the process of potentially being approved as the Commerce Secretary, and under oath, under his testimony, he specified that the tariffs that we're seeing now are more for negotiation, that the economic tariffs are not going to come until sometime in the spring. So assuming that he's being truthful there, which I imagine that he is, because why would you kind of lie about something like that? But assuming he's being truthful there, then these tariffs are really just for a negotiating tactic. They're not intended to actually, he's not actually going to follow through with them. At least, maybe there'll be some watered down version. But according to Howard, it looks like the actual tariffs that we need to quote unquote worry about aren't going to be coming until the spring. And given that this is kind of setting the stage for people to understand that Trump is serious about the tariffs, I do think that once those additional tariffs come later, it'll probably have less of an effect. I do think that most of the effect that this is having on crypto, on the markets, on everything, it's going to be very much pulled forward. This is something that a lot of geopolitical and political analysts were talking about, that it would be smart for Trump to try and do all this stuff out the gates and just get it out of the way. And it looks like he's going to do something along those lines. But as it relates to Canada and Mexico specifically, I do think that Trump understands that, or at least I would hope that the leaders of those countries understand that the U.S. has way more leverage here, and that they'll try and negotiate rather than fight. Because if they don't, then their economies will get smoked, and then we'll have bigger problems to talk about than crypto going down. Anyways, guys, if you did make it this far, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.